briefly, can you discuss your backgrounds and your connection to it? Bob, could you go first?
Sure. Thank you. Thank you, Howard, and good morning, everyone. My name is Bob Passmore, Assistant Vice President, Personal Line Policy at the Property Casualty Insurance Association of America. Many of you are familiar with us. For those of you that aren't, we're a Property Casualty Insurance Trade Association. We have nearly 1,000 member companies. Together, our members write about 35% of the insurance in the United States, 42% of the auto insurance. We have the most diverse membership of any property casualty trade, both large and small companies. Our primary mission is advocacy on behalf of our members. We do that in all 50 states and Washington, D.C. We have a presence in every state capital and a day-to-day relationship with legislators and regulators who deal with insurance issues. As for me, I come from the policy angle. I'm responsible for issue identification and policy development for auto insurance and claims issues. That's a pretty broad realm of responsibility, as you might imagine, but that includes issues related to fighting insurance fraud, as well as serving as the staff liaison for our PCI Fraud Insurance Committee. A number of members and former and current chairs are here with us in this group here today. It also puts me on handling issues involving auto insurance from the sales and underwriting side. So it sort of puts me on both sides of the transaction, what happens up, before and up to the sale, and what happens later on the claim side too. PCI members are dedicated to fighting insurance fraud in all of its forms, and we advocate in support of any number of anti-fraud efforts. As Howard will tell you, we work very closely with the Coalition on the Government Affairs front on any number of issues. At the same time, our members are concerned about regulations and laws that inconvenience their customers or incur costs that they ultimately bear when they're reflected in the premiums that everybody pays. Whether we're talking about disclosures on policies or on documents or procedures, it's important that those bring value, that policyholders get either good information from those disclosures or that those procedures that are being mandated by law deliver results, because ultimately the customers are the ones who are paying for them. And it's also important that insurers are able to use the tools that are available to them to be able to fight fraud. And there's more tools than ever before. As Howard, you heard some of our discussions earlier today about how sometimes our ability to use EUOs or IMEs, and there's other tools that are sometimes brought under fire these days. So that's all part of this discussion too.
Jim?
Okay, thanks, Howard. So I'm President and CEO of Carco. We were founded in 1977, which was really the year that the inspection program went in place in New York. I have an unusual background. I'm a former naval submarine officer, so I'm a glow-in-the-dark guy, nuclear engineer. And really that's my training. I was really brought in first at Carco as the CIO. We really needed to modernize our approach to the way we do business across both the inspection program and our other lines of business. And really, over the years I've been there, I've shepherded the inspection program from a program that used to use paper forms and Polaroid pictures into a program that's essentially fully electronic now. So to give you an idea of that, we have gone from, in 2012, we were only less than half of our inspections were done electronically. So the other half was done via mail form and partial electronic with partial electronic pictures. Now we are 98% mobile inspection. So it's a huge difference in the last few years. We recognized that we really had to transform the inspection program to solve a number of problems that were happening in the program that were really causing consumers a lot of inconvenience and irritating our carriers. So we've done that. You know, the program itself, my approach to technology as an engineer is, keep things that are working well and change things that aren't. And so the fundamental aspect of the program, which settled on pictures of the diagonal of the car, plus any pre-existing damage, plus the EPA sticker, we felt was a good formula for documenting and analyzing the vehicles for fraud. we simply made them electronic and made them transmitted instantaneously and under encryption so that we get rid of the mail problem and the inconvenience factor. And, you know, the other thing that we've kept and we believe is still very important in the program is the back-end analysis. So it's not just about collecting photographs and collecting inspection forms, it's also what you do with that information after it's collected. We still retain a number of people at our headquarters which analyze all those inspections, and we're still doing about 1 million inspections a year to look for possible instances of fraud. You know, we alert our carriers, we provide alerts on 24% of the cars will find something that is what we call alertable to the carrier. It could range anything from garaging locations wrong, which we pick up from a difference in the policy holder's address from where the inspection is being done, or undisclosed additional operator. Oftentimes the person coming to get the inspection is not listed on the policy, and we'll flag that. And, you know, believe it or not, I know garaging location is a big concern. I think there's studies have shown there's about $3 billion worth of lost premiums due to the garaging location not being right. Those are just two examples of the types of alerts that we provide to carriers, in addition to the traditional approach of documenting pre-existing damage and detecting stolen cars. So, you know, that's really what we've tried to do is really move the technology along and get it into the 21st century.
Well, that leads us to the obvious next question, I believe. Has technology outstripped the need for a rigorous pre-insurance inspection program to be in place? On Jim, then Bob.
So I think actually no. In fact, I think it's exactly the opposite. I think that technology is, you've got two forms, right? First of all, technology, and we've already implemented it, has made doing inspections easier. So, you know, and I think, Howard, you mentioned it in your original comments, that the original laws were crafted with a very narrow range of inspections. And by the way, the statistics are that Carco only inspects 8% of the cars in New York. And the percentages are lower in some of the other states. That 8% was chosen as a balance between inconvenience, because remember the regulation was set up in years past where it was a mail-in inspection. The 8% was chosen on used cars under certain situations because that would be the highest instance of fraud. With the ability to do inspections with modern technology, there's a chance to do more inspections. The question really comes down to, does database technology obviate the need for inspections? I'll point out that, and I've got, you know, packets if people want to take a look at it, but we actually run, for example, a Carfax and AutoCheck report on every car that we report to NICB or the carriers as possibly stolen. And almost invariably, almost 100% of the time, those reports come back with a clean bill of health. So we've identified a car with a bad EPA sticker that has either a bad VIN or it's indicated as stolen. The key is that the physical inspection is actually the data source. So electronic databases, all they do is collect information. The issue is you've still got to collect the information. And the physical sighting of the vehicle there's no substitute for that at the end of the day. You know, you can gain maintenance records on vehicles, you can detect, you know, you can get indirect evidence like repairs, but detecting fraud from its origins requires physical sighting. And, you know, the question is whether that can be done by the consumer themselves versus being done by a third party is a question about the integrity of the inspection. But at the bottom line, we believe these inspections, if anything, technology enables them to be done easier, and it's an important part of fraud fighting.
Thanks. Well, the auto, some of us have been around this a long time and remembers that the auto insurance industry, including PCI's predecessor organization, supported these kind of programs to combat, you know, cloned or phantom vehicles and those kind of circumstances. And all that came at a time before all these technological things that Jim just talked about, and also before the advent of VITAS, the National Motor Vehicle Title Information System, which was, I think, the Anti-Car Theft Act of 1992 ordered its actual creation, things like that, but that didn't actually happen until 2009. That's now happened. You have the vast majority of states, both reporting their title transaction data and their querying the system when they do title transactions that are going to that have probably gone a long way, that I think clearly have gone a long way into combating that kind of thing. So that's another one of the databases and really technological advances that have happened before that. But the other thing that's happened is the way that auto insurance is sold has really changed dramatically in the time since we've had, started bringing these programs on board, where often you had to go to someone and sign papers, and now it happens over the phone with a swipe or a click, something that's only going to, that is not going away, that is only getting greater use. And the question that's always come from, I remember as a young claims person, back in my former life as a claims person for 20 years, I always wondered, I worked in states that didn't have these inspection laws, so I always wondered why we didn't always have these pictures and things like that, and the question was always put to me, a question was put back to me is, well, how hard do you want to make it to sell? How hard do you want to make it for somebody to buy? And that was what, that's the thing that I think companies always struggle with, and unfortunately, because we have better tools and better information, that makes that question a little bit easier to answer. But as Jim says, I think there's also a valid place for these tools. Maybe it's just not part of a mandatory inspection program. So those are reasons why we've advocated for changes in existing ones, broadening the waivers in some cases, bringing down the period where you have to be a customer, or other waivers that we've pursued.
Which we agree with.
Yeah. Yeah, and in the situation in Florida, which allows companies to opt out of the state program as long as they file their own, that bill actually passed. And so, but that also brings up the point that companies should be free to use the tools that are available to them to come up with the fraud fighting methods and means that make most sense with their business.
Well, no, you're going to start on this one, Bob. Are there other means for insurers and consumers to meet the requirements of these inspection programs?
Well, I guess that depends on this, what's actually in each law. As Jim was talking about before, there's different, some of them are by mail, some of them require inspections. I know Carco has a bunch of inspection centers to make it more convenient for people to go different places and things like that. There's also, the advent of self-inspection tools that's coming online for, estimates and things like that, allowing those small, what people want usually when they have a claim is they want to get this taken care of as quickly as possible. They want to get themselves back on the road, their vehicle on its way to being repaired as quickly as possible. And especially for those small losses, those kind of video inspection tools can really really do substantial benefit in speeding that process along. This is another application for that kind of thing as well. So yeah, I think there's a lot of tools that could.
So I think, I think there's a role, for example, Carco's mobile technology was built to basically allow anyone to do the inspection. So right now we're only allowing our sites to do it, and we do have thousands of sites. And going back to what you were pointing out, that, when carriers were trying to make this decision in years past, we were still in the mail age, and so were most of the other inspection companies. So when you were talking about the prospect of setting up regulated inspections, it was an extremely heavyweight process. It was very difficult, and for example, in New York, we were laboring under a very tight grace period of 5 days with 3-day mail transit. And so a lot of people were losing their physical damage coverage just simply because of the timing difference in the mail. We, as you know, we worked with the DFS in New York to get the grace period changed out to 14 days, and then we went to almost all electronic. So that problem has largely gone away. And those are examples. I think, Howard, you mentioned that the model law was 1 year. New York was a 4-year requirement, right? And then we agreed that should be rolled back to 2. And so these were reasonable adjustments to the policies that we think, reset the balance point in terms of convenience. Obviously, there's a self-inspection would be the most convenient of all. The question, of course, really comes down to, with self-inspections, that's sort of a conflict of interest. You're asking, I think what was innovative did a study that 7% of claims are potentially fraudulent, and they typically, like we were talking about earlier, is done within the first 125 days. So the question is, if you allow someone to self-inspect, you're also including that 7% that could potentially do something wrong. And, you know, not having a third-party inspection means that you're only looking at the pictures that are provided to try and figure out whether they're defrauding you. An example could be a person can stage another car. So if they have a car that, is not damaged, that has pre-existing damage, they can find a car in a parking lot that looks exactly like theirs. They take a picture of their EPA sticker, but take a picture of the other car, and without having a third party to understand the context, it would be very difficult to determine those things. So I think the answer on self-inspections is there's a valid role for them, but there also is a reduction in integrity that you have with those inspections. So I think that you have to consider all those things to figure out the right role for each.
I think your point is well taken about there's a role for them in the context of all the other tools that are available for you. You know, there's a lot of things at your disposal to try to detect and deter insurance fraud, and if you just go one thing, it's probably not going to get you the result that you want. You need to you need to make sure that you've got a good representation of the tools on your menu.
Bob, just to remind you, we were one of the first providers of Invidus to the public, right? So we were one of the original providers. We actually added the Invidus information to the inspections because we felt like that was an important thing for carriers to get, even when they're ordering the inspections too. So, but Invidus, tidal washing doesn't detect all manner of pre-existing damage. In fact, the average claim on a car is about $4,000, which is well short of what's required to total and salvage the vehicle. So, there are many forms of damage that get caught by inspection programs that would not show up in a title in a title code. So I think that but Invidus is important. There are lots of cars that are flooded, totaled, that database becomes very important. And of course, I pointed out that Carfax and AutoCheck don't detect, in many instances, vehicle fraud right off the bat or stolen, but they also detect other forms. Right. So the bottom line is that I think Bob and I agree that the carriers have to use many different tools. One tool is not the sine qua non. You have to use many different tools in concert to be able to minimize these types of things.
Well, that brings us to another angle. One of the issues we've heard in Florida was that the study that they were required to do, the Department of Insurance, was to show the cost savings, the effect on fraud, how many frauds were being deterred, et cetera. Are there any metrics that could help quantify the cost savings in the states that require a program?
So first off, we were very disappointed in the Florida study. We really had submitted a set of questions that we thought would be reasonable to ask, and unfortunately those did not really appear in the final study. And one of the key questions that Florida asked, we felt was asked in the wrong way. They asked, were there any premium savings as a result of the inspection program? Well, if you ask that question to a person who's doing underwriting, they're going to answer zero, and in fact they're going to say there's probably premium increases due to the inspections. And you've got to think about, one of the things this is about matching risk, right? So one of the ideas around inspections is get the people to pay for the things that are high risk. So when an inspection indicates a spoiler on the car or aftermarket activity, that's an alert that goes to the carrier that says, hey, maybe we ought to charge this person a higher premium because they're going to drive the car in an irresponsible manner, undisclosed garaging locations. So the idea is to get the people to pay more premium that should be paying more premiums so that the rest of the people will get to pay less. And so the idea about matching premiums is important. So, it's unfortunate they asked the question in that way, because a more important question would be, what are the claims savings? So they didn't ask the question and probably didn't talk to the right departments. So I think, we don't have a lot of detailed data around actual claim savings. I can use, and we'll probably talk a little bit later about, the typical claim on a car is about $4,000. Typical fraud rates are 7%. It would be really nice to be able to get the actual metrics from carriers so that we could actually tick and tie this for real. And also ask the right questions. Make sure that we're including both claims and underwriting in this
Sort of
process.
like that question I raised, it would have been nice in California if they did a study prior to the repeal and after,
Yeah.
just to see if there was any change in the property
Yeah.
damage claiming on autos.
If I recall, Howard, it's a little bit before my time. Phil was around at that time, but I think that we were only in business in California for 2 years. And so if I recall, in New York, it took about a year before it started to drive down the theft rates. But we may have, if they had bothered to do a study in California that second year, they probably would have seen something. But at that time, like Bob was talking about, the inspections were so difficult to do. The agents were really upset about the inconvenience, and it really drove California to get rid of the program. I'll point out, by the way, that the agents act as our sites too, and they get to use the mobile technology. So one of the key irritants to the inspection, which is agent-based approaches, has been removed. I think, Bob, I'll point out that we still have challenges in the direct writing model. Carco has a lot of technology to put the inspection directly in the and also in direct writing sense to be able to cooperate with the insured. But that's an area where we can still do better with the carriers to make the experience better.
You both pointed out that there's not a lot of data out there about the effectiveness of these programs, and maybe you're right, Howard. There was a opportunity lost back in the day when California repealed its program. I know insurers in general are a little wary of data calls and things like that for a lot of reasons. It's also kind of I don't have to tell anybody in this room that it's really hard to measure insurance fraud. I always tell people it's like trying to nail Jello to the wall because you don't know what you don't know. We have a pretty good belief that there's a lot of fraud that goes undetected of all types, but it's really hard to measure. And sometimes we can get into some issues with, for example, when you do your fraud plan, and if you try to make savings a performance element or something like that, that's been problematic. That's been the result of been the cause of legislation and things like that. So you have to be careful with how you do that. I think companies have done a lot of their own. They're making these kind of calculations, and nobody wants to pay a non-meritorious claim. But they want to make sure that they're doing right by their customers. They don't want to put people who are not trying to make a non-meritorious claim, I'll call it, through more than they need to be. They don't want to inconvenience their customers more than they have to. But I don't think that anybody would, any of our members would rule out some sort of a study on those things. One thing I'll also point out is, we have these states that require these laws, but insurers of all shapes and sizes have all kinds of programs that are aimed at this kind of thing. And as a old claims guy, I will never tell you that having pictures of old damage isn't going to be helpful, because I've had those situations as well where you found out that somebody tried to make a claim for the same thing, something they claimed a year ago that had just never been repaired. And you went and dug out that old file and you found out, boom, this is even in the paper file days, you could find that stuff out. But some of that stuff can be done with databases and things like that, or at least give you the inkling that there might not be something right about this. Getting back to the data issue, I think you're both right that there's not a lot of solid data behind it either way.
Yeah, I mean, when you do the math on the data that is available and use, say, for example, the $4,000 average claim number, the 7% fraud rate that's been quoted, I think it's 7 to 10. I think ISO says 10. I think Innovative says 7. So the theory is that somewhere around 10% of the claims might have fraud involved in them. When you do the math on that, for example, in New York, we identified or prevented $110 million in losses over 5 years via that methodology, but that's a calculation. It's not based on actual data. So
it's sort of like, how do you measure how many frauds you deterred when the whole object of the inspection program is to deter the filing of the fraud.
Well, you can't measure deterrence. And so the other thing that I will point out, and by the way, yeah, well, that's exactly right. And the interesting thing, though, I think a comment here is that the fraud rings have shifted to medical fraud, PIP. They largely did that because this area is a hard area to conduct fraud in. So, I mean, the answer about our low theft rates is kind of like, well, why does the New York City enjoy the lowest crime rates of any major city in the United States? Well, it's because they have the best police department in the world. And so the answer to those low crime rates is not to get rid of 3/4 of the police department. So don't reverse cause and effect in your thinking. Those fraud rates will not necessarily remain low if you remove a program that actually makes things difficult for the car thieves. I mean, at the end of the day, these rings are looking for areas that are easy to operate. And so if you remove a major fraud finding component and they recognize that it's easier to go back in there, I guarantee you that there's going to be a return of that type of crime. So the deterrent, no one knows exactly what that effect is going to be. But we do know what the curves look like when we put the programs in place in 78, and what happened to this particular type of crime. It would be bad to see it go in the other direction given all the other problems that we're having in the medical fraud area.
Well, one more question. And finally, how do we ensure that the goal of a vehicle inspection is maintained if we move away from a photo inspection?
That's a tough one. There have been a number of movements to try and make the program voluntary. Now, 2 states have essentially become voluntary already, with Massachusetts and New Jersey. And it didn't zero out the inspections, but it reduced them by essentially anywhere from 3/4 to 90%. So essentially 90% of the inspection volume in Massachusetts went away. And you ask yourself, well, why would that happen? Well, it's a little bit complicated. On one hand, on the face value of it, insurers you would think would value the inspections. And of course, we also have this new technology. We can do mobile inspections. We can do self-inspections as a sort of a second-tier approach, but that's relatively new. But if you look at the programs that happen in Massachusetts, what happens is that insurers want to underwrite policies, and they're trying to steal market share from their competitor. And so the way this happens is that, the regulation essentially makes it voluntary. One carrier will, to try and gain temporary advantage against one of the others, will essentially make the inspections voluntary to stop doing them so they can get people on board faster. Well, then the other carriers, seeing that happens, they decide to do the same thing. And so what you end up with is a spiral down where no particular fault of any particular insurance company, they're just reacting to the market. So this type of program, there are like other instances, no one likes excessive regulation, but there are certain instances where regulations have to be in place to equalize competitional aspects, equalize things among insurance carriers so they don't do things to try and compete with their competitors that actually are not in the interest of the consumer. And insurance companies, remember, at the end of the day, they're sort of split-brained, right? On one hand, they're trying to minimize fraud, but on the other hand, they're also trying to maximize the return for their investors. And if they're allowed to by the state, they'll just simply raise rates to cover their losses. So it's not a foregone conclusion that insurance companies, if they're not regulated, will simply act in an interest to maintain premiums low. That's not guaranteed. So this is where a proper balance of regulation is required, right? The question is, where's the right balance point? And then in today's world, what are the additional tools that we can bring to bear to make sure that we're doing all the tools? So, I think it was interesting, Mark Shugall earlier today in his study said that, 80% of the people that were surveyed on how, and these are people that also conduct the fraud, by the way, they were asked, how do you prevent fraud from happening? And 80% said verify the information on insurance applications, right? But as you were talking about me on the sidebar earlier, those are also the same people that don't want to submit all that paperwork and don't want to go through inspections and less documentation. It's really interesting, almost a schizophrenic view from people, right? On one hand, they don't want to fill out the paperwork, they don't want to do the documentation, but you ask them a question about, you know, what would minimize fraud, and they know the right answer. They know the answer is to fill the documentation in and also get it verified. So it's an interesting quandary.
You know, I do think, you know, maybe we need to take a hard look at the goal. The goal might not be to have a photo inspection program, but to have some program in place to combat vehicle fraud. Can be a part, that is a part of a lot of fraud, you know, plans that you have to file and things like that. And there's so many tools out there for insurers to use. So, you know, I would suggest that maybe the goal should be making sure that we protect and preserve, and in some cases preserve, the rights or the ability for insurers to use the tools that are at their disposal to come up with an effective program to detect and deter fraud and inconveniencing customers as little as possible. You know, you're right about, you know, I talked to you about having a foot in both worlds because I work with our auto committee and with our fraud committee. So, you know, in some cases, the folks that work for our member companies are of two minds, and, you know, I'm a good trade association person. I stand with our members. So, but I think really we need to take a look at, maybe this is part of a broader issue about, you know, the ability to use the tools that are available to the fraud fighting community.
Okay, with that, what I'd like to do is open it up.
I'll just start off with a comment. The model bill that the coalition adopted in 1994 basically came about because it was heavily lobbied for by our consumer members. And at the time, there was a perception that a lot of false claims were being paid for existing damage and for phantom cars. And there was those states that had adopted the regulation seemed to be the ones that had dealt with it. And the consumer members felt that insurers were just passing these costs on to the policyholders. So the question would be, how do you convince these people that in the absence of regulation, and I think you just did answer it in part, how do we make people understand that insurers are still doing their part? And when I say insurers, I think the companies represented in this room are, I'm convinced, going to make the right decisions and will inspect the cars that need to be inspected. But there's a lot of other auto insurers out there that may not opt to do that. And again, the consumer is going to end up footing the bill for that. And how do we go about, you know, perhaps fashioning a new policy that would support regulation that would do the job that Howard talked about, but at the same time would have the support of industry.
So, you go. So.
We had the inspection law for established period of time in New York before we had it in New Jersey. And at that time, the SIU operation I was responsible for, I remember distinctly that as SIU auto physical damage claims being referred to SIU started to decline a bit in New York, in a reverse, our New Jersey referrals picked up. You know, so we saw a direct effect of the inspection law, you know, in that regard. So, for what that comment's worth.
I appreciate that. I think that's right. And again, that sort of maps back to what would happen if we, you know, did away with regulations entirely. And going back to Dennis's comment, I think that first of all, I think it comes back to better data. So, you know, I don't think the Florida study was well designed at all. I think it was very poorly designed, unfortunately. And by the way, I'll point out the Florida program doesn't take pictures either, which has always been something we've been vehemently opposed to. We believe that an inspection needs to have photographs to be effective. And in fact, the photographs need to be analyzed.
It's not statewide.
You can't just, right, it's not statewide. It's only a few counties. It's paper only program, so it's not really the most effective. Maybe there's a core, and by the way, site networks are very difficult to set up. I mean, it took Carco many, many years to set up the thousands of sites. It's very heavyweight. You know, most inspection companies use a rover model, traveling salesman model, because it's actually easier to do. It's harder on the customer because you know that's like waiting for the cable guy to show up. But it's easier for the company. We went it the hard way, setting up thousands of sites. It's very difficult to do on a national basis. So I think there's a role for a two-tiered approach where there is a self-inspection component. And I think as we develop more information, Howard, on this type of thing, I think it's going to become more clear where those two tiers are most appropriate and how they could be better utilized. And I think there is a chance to better utilize them as part of the complete.
Do you have anything with
Howard?
that?
Howard?
I want to thank you both, and I hope you learned something from this discussion. With that, that's the end of the government affairs portion.